Good day, everyone. It's a new day, so welcome to part two. We're going to go straight into part two of the market structure basis. Now, the market structure basis part two, which I'm going to write here. So, the part two, we are mainly going to be talking about what we call support and resistance. Then we'll talk about supply and demand. Okay, so the first thing we have to know here is support and resistance. They are both contexts that we usually use when describing market structure. Now, I remember from the previous video, we have higher highs, higher lows, and all of that. Now, let's take for instance, we have such sort of thing. Now, if you look at this, basically you can say that it's an uptrend, right? Okay. Now we are trying to identify what is called the support and resistance. Okay, before we get here, let me give you the definition of support and resistance. Now we'll start first with this support. What exactly is support? Support, this is a level where price has failed to get lower, and it's just vice versa for resistance. So resistance is a level where price has failed to break above, right? Now let's read this again. It says support. This is a level where price has failed to break lower. You can say to get lower, you can say to break lower, right? Now resistance is a level where price has failed to break above. Now take it. In other aspects, you can give a synopsis for this is you can call the support as a floor. You can call it is also referred to as the floor, while the resistance is also referred to as the roof, or should I say ceiling. Now, support is also referred to as the floor. Resistance is also referred to as the roof or the ceiling, better off. Now, when we're talking about support, this support means that this is where price has been having a difficulty, having failed to break lower down or get lower down. Now, follow the definition. The definition will make it more easier for us to identify it when we're looking at the chart. Support, resistance. Support, resistance. Support is where price has failed to break lower down. Resistance is the level at which price has failed to break above. Now let's get down to the chart so you can see something. Now this is the reason why I drew something as messy as this. Now if you look at this, right, to identify your support or to identify your resistance, you are going to find levels at which price has failed to break. At least, okay, this is a criteria. Take this. This is a criteria for both. There's always a criteria to be met. Now the criteria is it must have at least at least two touches. This is how I spell it. Alright, at least two touches, which is if it doesn't have up to two, it's not a valid support. If it doesn't have up to two touch, it's not a valid resistance. Now, in drawing this, you have to first of all identify where are the levels that price has failed to break above in this instance, or in this particular chart that is drawn here. Now, where is the level that price has failed to break above? A very simple thing to come by is here. You can look at it. Price came here one, failed. Came here twice, failed. It has met the criteria, right? One thing you should understand is that we don't mean a particular price. When we're talking about price got to this level and was not able to break through, we mean like a certain not percentage, a certain gap level, to call it a resistance. It mustn't be too far. Like this, it is resistance. This is resistance. You take a look at it. This is the first build, the first touch, second touch, it failed to break above. Third touch failed to break above and fell off totally. Now take a look at this. The drawings don't really matter. What matters is when you are drawing this your resistance or taking your resistance. When you are taking your resistance, it doesn't mean it has to be very big, it has to be something. No, just draw your resistance according to the structure that is given. When you identify your resistance, it is at a place where price has failed to get higher than within that certain time. And remember the criteria, it must have at least two touches. That is the criteria. It must have at least two touches in order to be a resistance level, which is saying it must have failed at least twice in order for it to be a resistance level. Now, talking about supply, yes. Supply, now we can come to this way and say this is our supply. Now, our supply, remember the supply, sorry, if I say supply, support. The support is here, where price has failed to break through, which is to go lower. When price has failed to go lower, that is what we call our support. And the resistance is where price has failed to go higher. Keep this in mind. It must meet the criteria at least two touches. If it doesn't have up to two touch, it does not make sense at all. It must have at least two touches. There's a reason why I am being specific about the criteria. Resistance, resistance is the ceiling, the roof. Support is the floor, where price fails to break lower. Resistance, where price fails to break high. Now let's go into a different one. This is called the supply and demand. Now, what is supply? Normally, if you look at things, we have what is called economics. I'm sure probably a lot of us did economics during our secondary school days rather. Now, supply, when the simple definition of supply is when there are goods to serve the purpose, when there's a service to serve the purpose, that's supply. And it meets the people, the consumers rather, that's supply. And then the demand is when people want goods and they don't have it. That's demand. Supply, when people want goods and it's too much. Are you understanding? Those are the concepts of supply and demand. The supply is when the goods are much. The demand when the goods are less, but people want them more. Now, from me defining these two things, I'm sure you should understand that supply. Let me give you a definition here. Let's say supply is the level at which people are willing to sell from. Then the vice versa for demand, which is where people are likely to buy from. The definition doesn't really matter. It's just if you understand the concept. Now, listen to me properly. Definition, you must understand the definition in order to use it properly. Supply is where there's availability of the product, but it is not much in demand. Let's use something that we all understand. Let's say probably noodles. I'm sure we all know noodles are indomitable and the rest. Now let's take it that here is what we call let's say here's the noodles, and then here is the price. Yes. Now this is our price. This is the noodles. Now think about it. This is point. Let's say this is 0.0. Here is 0.0. This is 0.0, right? Okay. Now the first thing you have to realize is that the company that has the noodles, which is this, the company that has the noodles, when there's excess supply of the noodles and people don't want it, the amount at which the noodles is sold will reduce. Let's say this is the price. Yes, this is the price of noodles currently at, let's say the small one should be thereabouts. I don't know, I've forgotten. Can't remember how much, but should be there about 500. Let's say it's 500 naira, or better, let's say it's 5 naira. Right? Let's say it's 5 naira. That is how much it's for the smallest noodles. As of now, let's just example as 5 naira. Now the current price is 5 naira, and imagine the people that want to buy noodles. Let's say the people that want to buy noodles. Please understand. I know that I'm talking too much on the economics right now, but still follow me up so that you understand supply and demand. Now, when we're talking about this, remember the price is 5 naira for one of the goods, which is like one of the noodles sachet. The price currently is 5 naira. And now it's at a point at which people don't need noodles anymore. They don't really value the noodles anymore. So much people now, they don't want the noodles. Like now, imagine you are the owner of a shop, like a retail shop, and then you notice that your customers don't really buy noodles. What are you going to do? Are you going to keep them in your store for them to get support? What will you do? You will sell them at what? At cheaper rates in order for people to buy. Do you understand? You have to sell them at a cheaper rate in order for people to actually buy the thing. Because most people now, they don't want it. So when they don't want it, the price has to reduce because there's no demand for the thing. It's okay. Let me write the concept here. The concept of supply and demand works like this. When there is excess supply or no demand for the service or product, the price will sell off. This is the concept of supply. When there is excess goods, when there is excess of the service, like now, let's imagine something. I gave you noodles here because I want you to draw a table. But now imagine we have POS, right? We have POS from here to, like now imagine that you're working from, like me that is within the estate here. I'm walking from the estate to the main road. Before I get to the main road, I've seen one POS joint by the estate gate. After, let's say 10 feet after the estate gate, I see another POS. Another 10 feet or 5 feet, I see another POS down. What do you think will happen in that locality or that area? that area, the price at which they are charging for transaction is going to be far low because everybody wants to do transaction. They want volume to come into. So if one person is charging 100 naira for, let's say, 5,000 naira, you can easily tell the person, I don't want to do it here. I'll go to somebody else that is doing 18 naira for 5,000 naira transaction. Simple. Now, that is the concept of supply. When the product is too much, or when there's excess of the product, the value of that product reduces. Just like in this noodles case, when there's too much noodles, in the circulating system, there's too much noodles, the value tends to what? To depreciate, which is what causes the bearish market. The prices start to depreciate to a point whereby people are going to start needing it again. Now, take it that here price is what? It's at 2 naira, right? So price is trading at what? 2 naira right now for one noodles. Take it that price is trading 2 naira for one noodles. Now, understand this. People are selling the same noodles that was 5 naira at a point for 2 naira. Why? Because there's too much of the noodles in the circulating system. Another example I will give you so that you understand supply is in Nigeria. If the reason why there is limit to how much you can withdraw from your account is so that the naira still has its value. If there's too much naira in the circulating system, the naira to dollar rate will continue dropping. Why? Because there's too much. It's just like when there's too much availability of yourself, your value becomes unknown. Or not unknown rather, but your value becomes to drop. It starts dropping. That is what supply does. Supply brings about sales. Supply brings about sales. Which is okay. Like now, imagine when iPhone first of all came out. Yes, it's going to be like the iPhone 16. The people will be selling at that point 4 million, 3 million, like they were selling it at that point. But now, when the thing started circulating everywhere to different retail shops, different wholesalers, they are having, do you think it will be selling at that price? No, because people want volume or they want transactions to happen in their store or whatever. So many people are going to fluctuate the prices. You might be selling 4 million, another person is selling 3.8. What do you think the people are going to do? People are obviously going to go there, and if you think there are other people are selling 3.7, 3.6, obviously people are going to be moving. That is the power of supply. Supply causes sales. Let me write it down here so that you know. Supply causes sales. Now, before you skip this part, I want you to know and understand that. See, the reason why I am detrimentally the reason why I'm explaining this is to your own help. Because without all of this, you can't understand the fundamentals of the market. You can't understand the economics of the market. Because if you skip this part, when we start going into fundamentals, for you to understand fundamentals, you will start messing up with yourself again. Why? Because you don't understand the simple thing of supply and demand. Now, listen. Supply causes what? Sales. When there are too much supply of a goods in the market, it causes the price to reduce. And whenever the price reduces, what happens on the chart? What simply happens on the chart is start selling. They start selling. I have used Naira as example. I've used noodles as example. I've used iPhone as example. What else should I use right now? I think those three should be enough. That is a supply. Supply is at which people are willing to be selling. They want to sell. They want to sell. They are never concerned about buying the material. They just want to sell what they have. Supply comes as a result of what? Excess of the product, excess of the goods. That's where people start selling. Now let's go to the other part of this, which is the other is now what? What we call our baba, which is what? Demand. Now, in the case of demand, let me get the table drawn here again. In the case of demand, right? Let me use the same examples that I used here. All right. So now, in the case of demand, let's look at it like this. Demand causes what? Demand causes bias, which is demand causes bias. Okay, demand causes bias. Now, understand, let's say the trading price of noodles was what? Oh, sorry, let's make it here. The trading price for noodles is, at this point, is what? 2 naira. So, we're going to take it as 2 naira now. We are going to take it as what? At 2 naira, which is here. Now, follow me detailing, structurally, follow me. Now that it is 2 naira for a pack of the noodles, or for one, or the smallest quantity of noodles is 2 naira for the noodles. Now what happens is that people will start looking at it that, oh, if noodles is 2 naira now and before it was 5 naira, so they will start looking at it as investment, which is people now want the thing. Take note of the first thing. The first thing that happens before a demand is the product availability becomes less in order for them to be a demand. It's just like, let's say, iPhone 16. When it first of all came out, that it was 4 million, yeah? Let's say it was 4 million or 2 million naira. Let's use 2 million naira. Let me change this thing to iPhone so that it will be a bit more understandable. Yeah? Let's say that 1 unit of iPhone was sold at 2 million naira. Now, when this thing came out, there was a rush globally that, I want this phone before any other person will have it. I need it. And how many quantity did these people make? Did Apple make of the iPhone? They only made, let's say, 100 or 100,000. They only made 100,000 units of this thing, and the trading price is what? 2 naira. They only made 100,000 units of the price of this iPhone, trading one of the units at 2 naira. What do you think is going to happen? There's going to be scarcity. Once there's scarcity, people start to valuing the thing. Like now, imagine that time that there was a time, whether last year or the year before, there was a time in Nigeria that there was no naira. Like to see naira was by God's grace. So POS people, they were the ones backing it at that point. Why? Because they need there's a demand on naira at that point. There was a massive, before people started getting this what they call it, this POS machine in their stores. They are not doing POS, but they want the machine there so that whoever comes can withdraw, transfer immediately. So before all of those came in, now the naira was in massive demand. Because it was a massive demand, POS people, that's where you see that many people started entering into POS. Because why? It was in demand. Naira was in demand. So if you have 100,000 naira and to withdraw 5,000 at that point, I think they were taking up to even 500 naira for 5,500 naira. So now imagine somebody said he wants to withdraw 100,000 naira. What is that? 100,000 naira, I think that's almost 10,000 if you calculate it. It's 10,000 naira extra from 100,000 naira debit or withdraw. Sorry. Now understand how the demand is going. Now remember, let's go back to our first example, which is this iPhone. We have 100,000 units. How many people are in the world? Okay, let's see how many people are how many people are even in my school. Let's not take it to plenty places. How many people are in my school? There are over 100,000. Or no, let me not use my school. Let's use a less more popular place. Let's say, how many people are in a state in Nigeria? Let's say Delta. Lagos. How many people are in Delta State rather? Or let's use Warri. Over 100,000 people are obviously going to be in Warri. Warri as a central. More than 100,000 people are going to be in Warri. And let's say more than 100,000 of those people, let's say we have a million cap of people inside Warri. And now the people that can afford this phone are up to 200,000 of the people inside Warri that can afford this phone at 2 naira. Now, since there are 200,000 of them, it means that the value is going to be what times two, because it will not be like an auction where everybody wants to get the thing instantly at that moment. Now, if you are the one selling, if you are the one that iPhone gave the 100,000 units to sell, what do you think you will do in order to make profits? What will happen is, since there is massive demand of it, price will start increasing. It will start increasing bit by bit. It will start increasing bit by bit. Why? Because there's massive demand of it. Massive demand. At a point, it could even increase to what? To 5 million for one unit. That is when the more it goes down, the higher the price. Which is, it's saying demand brings buys. That's the first thing. Now, we only had 100,000 units of the iPhone that was selling at 2 million first. Now, the instant one iPhone is sold, it reduces the amount here to what? 99,000. Now that it is 99,000, people are going to say, there's no more, let's go and rush it and get. The person that is selling the per unit to consumers, what will he do? It can obviously increase the price. Maybe from 2 million now we had 50,000, we say 2,050,000 for the next one. For the next one, the more it continues going, the more people are going to start pressuring that they want it more and more. Now that is the concept behind supply and demand. Supply, what is what? Supply, define it for yourself now. Supply is when there's excess product or service in the market for a particular thing, when there's excess of that thing, excess of that service, excess of the product in that particular market, it's going to start selling off. Why? Because people don't need it. When people don't need a product, it starts selling off until the price becomes cheaper to a point. That's when demand comes in. Demand comes in when people need this product and the product is not much. Imagine people now needing the iPhone, just like I've explained. They need this iPhone, and the more they continue buying the iPhone, the more the price increases for the iPhone. Because imagine you buy an iPhone, somebody tells you that you buy the iPhone that is in demand. You bought it 2 million naira. Obviously you know that when you are going, you cannot get it at that 2 million naira again. Why? Because the price increases the more the unit reduces. That is something you should understand. The more the price increases, the more the unit decreases. That is how demand and supply plays a very crucial role to this market as a whole that we are trading. This market as a whole, it fluctuates with this. That's what you should understand. Now, I want to give you an example. Now, let's look at this. There was something that happened during December 2024. If you take notes, Naira became more valuable. It reduced the USDT to Naira, USD to Naira reduced to 1,400 and something, 1,430. Now, why did it reduce at that point? It's because of what we call supply and demand. There was excess dollar coming into Nigeria, because we have Nigerian people outside the country and they have families that are inside the country. Now, December came, what happened? Everybody wants to come back and see their family before they go off again. Now, they came in with dollar, dropping dollar at banks, telling banks that they want Naira now. Now, Naira started becoming what? In demand. The more Naira became in demand, the more valuable naira became, and the more cheaper it was to USD. But now, if you look at it, it has increased back to its 1.5, so its stable form for the now. It has increased back. Now, just look at this. You can see supply and demand playing its crucial role there. Supply and demand, this is something that in everywhere, any market, supply and demand has a lot to say. Now, with all of this, I hope you understand what supply and demand plays in the market before we actually start finding supply levels or demand levels in the market. All right, now we're finished with understanding the economical aspect of supply and demand. Now, I'm going to show you the drawings of what we call supply and demand. Remember, demand is what? At the bottom, while supply is what? At the top, right? All right, so let me draw something for you so you guys can see. Now, looking at this, I don't want to draw it more complex than this since we have not dealt in much about the market structure like that. So now looking at this is where the market opened, right? This is where the market opened. And the market opened with what? The market opened trading at, let's say, $5. $5 per whatever unit it is. Per whatever unit, that's what it opened with. The first of all thing that happened was there was a sell-off here, and then people started buying massively. Now, what happened is when people buy massively, what does it signify? It signifies demand, which is now what? There's a demand level here. Because why? People bought immensely from this price, which is the price now was cheaper than what? $5. Now imagine, let's say the price here is what? The price here is, let's say it's $10. Because the price did a 100% run there. It is now worth $10 per unit. Before it was $5. When it was $5, people were selling off. Now, the instant it became probably $3, $3 here, people bought immensely. Like when I'm saying immensely, I mean people started buying up to 100,000 units of the thing, which caused the markets to go up like this. Now, in certain cases, this demand level, because people bought immensely from here, which is now what? Within the level of $3 to $4, that's where people bought for massively. What does it tell you? It tells you that, okay, even without looking at the charts, let's use real life now. If let's say a raining shirt, maybe a Louis Vuitton type of shirt started raining in Nigeria, and people started seeing the shirt at maybe they were selling it 5,000 naira for the shirt. Sorry, 50,000 naira for the shirt. Let's use 50,000 naira for the shirt, and then the shirt became a bit cheaper to 40,000, 30,000. Then people went in massively. They went to the market massively and started buying in bulk. In bulk, they started buying in bulk to sell to consumers. Me and you now, we are the consumers. Now, when we want to start selling, what do we do? Sorry, when we, the consumer, want to buy, what do? We go to the market to buy at the price they are selling. These people, the wholesalers, they bought at what? $3. Sorry, 30,000. And now they have 100,000 naira per unit. So that's what they are now selling the shirt. We are the ones buying from 10,000 until the price reduces again. We are the ones buying from what? 10,000. We are the ones buying from what? From 10,000. 100,000. We are buying from 100,000. The thing reduced to 70, reduced to 60. We are the ones buying at what? 100,000. Till now, price came back into this demand. What do you think the people are going to do again? Now they know that they made profit from the market that they sold, which they bought it massively when it was worth 30,000. And now the price became 100,000, which is like almost, it's even more than 3x of what they bought. That's what they made back. So they made back 300% of what they invested. Yes, of what they invested. Now price has come back to that level without the market being intervened, or without you seeing the market. What do you think will happen again? Obviously, the wholesalers now are going to go back to when price becomes cheap again, to let's say within the range of 30,000 to 50,000, 50,000 to 30,000 for one unit. They are going to go again and go what? They are going to buy massively again. See, maybe now price becomes what, 150,000 for one unit, then start selling off again. Then comes back to demand and push it up again. That is just the simple concept of how demand works in the market. This is just how demand works in the market. They have to be, the demand is mostly persuaded by the wholesalers, not by the retailers. The retailers are the ones that makes the wholesalers have their money, or the producers have their money. You understand what I'm saying now? Follow me properly. When we get to the chart time, I will talk more on how you identify it on the chart itself. Now, I hope with this you understand what demand is. Let's flip it now. Let's talk about supply. Majorly, it is the same concept for supply, which is at what price do people start selling off their goods? At what price did they start selling off their goods? Like now, the shirt that came into rain before, which is like that shirt that came into rain that people were buying 100,000. The wholesalers, they bought at 100,000. What did they do? The difference between supply and demand is that supply, the wholesalers make massive profit, and supply, the wholesalers make massive loss. Just forget about the wholesaler. All those are not really concerned. Just focus on what is happening here. Now, after all of that, they bought the shares at 100,000 naira. All these things that I saying, this is 100,000, this is 50,000. They bought the shirt at 100,000, which is where the market started trading for that shirt that was raining, 100,000. Now the price increased to probably 120,000. Then do you know what the wholesalers said? The wholesalers were the ones that bought the product from 100,000, making it 120,000 naira for just one of the products. Now one of the products is what 120,000 naira. Now what happened? What happened is that there's too much supply of what? Of the shirt. Now when there's too much supply of the shirt, what do you think will happen? Everybody wants to make transactions. Most of the time they'll stop bothering about profit. They just want to make back some of the losses they have. They already know they have loss. So they just want to make back some of the money. You don't understand? So that's what's going to happen now, which is where the wholesalers started selling massively the products they had. They started selling massively till one unit became 50,000. Now, when one unit became 50,000, that's where you started seeing the consumers, they started buying small. Price was increasing to 80,000. Buying small. Price became 110,000 naira now. What happened here? Yeah, the goods is overpriced. This is our supply. The goods is overpriced. How can you be selling me tomatoes that was the 100 naira tomato before, you're not selling it for 1,200 for me? For what? Do I want to buy? Carry your goods and get out. Now imagine tomatoes that is perishable under how many days if you don't provide it if you don't apply the proper storage to it. A very perishable product. Now imagine what will happen. Everybody wants to cover up that loss that they made again, because now it is an opportunity for the wholesalers to buy again. Then as they bought again, what happened? They started selling massively. Why? Because they have seen that they have made losses. This is how supply and demand usually works. Now, there's a difference between supply, demand, and a big difference between supply demand and resistance with support. Take note, I'm going to draw this thing and take note of this. Remember, the floor is what? The floor is what? The floor is, as we talked about, support. The roof or the ceiling is what? Resistance. Now, what is demand and supply? Now, take very clear note of what is written here, of what I've drawn here. Let me also write them out so you can see. This is what we call the resistance. We have the support here. We have what is called our supply. And then we have our what? Demand. Make sure you take note of this. Look at the difference between them. They might, most of the time, they are confusing because when I first started off, they were confusing to me. I thought supply and demand was the same thing as resistance and supply. No, they are not the same thing. Resistance is the roof at which price failed to go above. Support, the place at which price failed to go below. Demand is now where the price failed to go below. Demand is where people wanted excess of the thing and they bought. Supply is when there was too much of the thing and people started selling. Look at them well. Make sure you do well to understand. Because from here, we go into deeper things that are more confusing. So understand this. Then when we get to the fundamentals, you can see why the fundamentals move the market more than the technicals. The technicals makes us to understand how the market moves. The fundamentals show us why the market moves. Like now, I explained the concept of economics here, supply and demand. You can see why the market moves like this because I've explained it for you just now about the product, people coming here to buy more, or the wholesalers to sell again to retailers for them to buy more again. You can see why the demand is working. I have given you the fundamentals of why it is working. Now, this is the technicals of how it is working. You understand why and how. Why is fundamental, how is technical. With this, I hope you understand everything we have been talking about for a while. So have a great day, and remember, do well to study. Do well to study. All right.